Checking finance for you now. The Dow Jones is up 22 points. The Nasdaq also down. A finish in the green for the FT100 in London, and Germany's DAX lost 22. Closer to home, Japan's Nikkei closed 412 points higher. Hong Kong's Hang Seng also performing really strongly. The All Ords added 6, as did the ASX 200. On the commodities market, gold is trading at $1,965 an ounce. Oil is $81 a barrel. The Aussie dollar is buying 67.15 US cents, 95.5 Japanese yen, and $1.08 New Zealand. Well, new data out this morning shows home prices around the country are still climbing. July marked the 7th straight month of growth in residential property. Homes in Brisbane, Sydney, Melbourne, Perth and Adelaide all recorded some small gains. For more, I'm joined by senior economist Eleanor Creagh from realestate.com.au. Morning to you, Eleanor. What are some of the key drivers behind the growth in home prices?
Morning, Eddie. Great to be here. So we're continuing to see that the 2023 property market recovery has continued in July, and we've really got this ongoing drivers of what is stronger housing demand relative to supply of stock on market. So we've continued to see in recent months that the flow of new listings has been relatively soft, and we've got stronger housing demand likely bolstered by the strong rebound in net migration, what are very tight rental markets and tight labour markets. And that's creating more competitive selling conditions and seeing home prices continue to lift.
What are we predicting over the coming months with property prices going up? We're hearing this morning those figures that 150,000 households will come off those really high or low fixed rates and move to a much higher mortgage rate. What is that going to mean for them, and what will it mean for the rental market?
That certainly will be a test of housing market conditions over the coming months, as we see a number of those borrowers who have been on record low fixed rates moving on to mortgage servicing rates that are substantially higher. But for the most part, we think that those households are going to continue to prioritise their mortgage repayments. Don't forget, they've got substantial buffers accumulated throughout that cheaper fixed rate period. And the tight labour market also provides a safety net, with the unemployment rate still sitting at a multi-decade low. We've also got very tight conditions in the rental market. So vacancy rates are sitting at or close to record lows in most capital city markets, which is also a factor that could be playing into that stronger housing demand environment in the market to buy, given it could be incentivising those with the means to do so to purchase maybe sooner than they otherwise would have, given those challenging rental market conditions are continuing.
All right, Eleanor, you live and breathe this stuff. The Reserve Bank is meeting later today. Its decision on interest rates could have a huge impact on property prices. What's your money on?
Look, I think it's certainly going to be a close call. I'm expecting that the Reserve Bank are going to maintain their pause today. We're continuing to see the momentum subsiding in inflation pressures. We've also got that sharp slowing in consumer spending. And as we've been talking about, there's a substantial number of mortgage holders out there who are really yet to feel the full impact of the Reserve Bank's substantial tightening that's already been pushed through. And as such, I think that we're going to see the Reserve Bank pausing, and just gives them a little bit more time to assess how economic conditions unfold.
We very much hope you're right. Thank you so much for that, Eleanor.
Thank you for
I'm not
having me.
sure that many households have a huge buffer anymore. I know we did during COVID. I feel like that's sort of, eking away, isn't it?
And let's see how consumer spending goes with Paul McCartney tickets on sale. Could just rise a little.